It started with a quiet terminal alert in Singapore. A shipping manifest froze. A cargo vessel loaded with U.S. soybeans was told to turn around mid-Pacific, and by sundown, 2.4 million tons of soybeans, worth $1.1 billion, had vanished from American hands. Cancelled. Deleted. Overnight. The market shuddered. 40 ships rerouted. Contracts dissolved. Wall Street flinched. And Washington? Caught flat-footed. This isn't just a trade dispute. It's a message. It's a weapon. It's China pulling the plug, not with missiles or sanctions, but with soybeans. And if you think this was only about agriculture, think again. Because this may be just the first domino in a larger, more dangerous game. So what really happened? Why soybeans? Why now? And what does it tell us about what might be coming next? In this video, let's know about the whole story. For decades, soybeans weren't just another American export. They were the quiet workhorses of the U.S.-China diplomacy. While tech firms and trade negotiators clashed in front of cameras, ships loaded with soybeans departed from the U.S. Gulf Coast and Pacific terminals, silently feeding China's expanding urban middle class. The soybean trade, worth $14.3 billion in 2024 alone, formed a rare thread of stability in an otherwise volatile relationship. That is, until April 28, 2025, the day the thread was cut. Without warning, Bloomberg reported that China had canceled all scheduled soybean orders from Cargill, ADM, and Bunge, the three biggest players in the American agricultural supply chain. The message was chillingly surgical. No renegotiations, no phased exit. Just a cold announcement of procurement realignment and a redirection of 2.4 million metric tons of soybeans to Brazil. For context, that's nearly 1/3 of what China typically imports in a month. But this is now gone, rerouted mid-ocean, and erased from U.S. books within hours. The financial shockwaves were immediate. USDA data released days later showed soybean inventories spiked 13% almost overnight. On the Chicago Board of Trade, soybean futures plunged by more than 8%, wiping out $470 million in market value in less than a week. In farm towns across Iowa, Illinois, and Indiana, the reaction was devastating. Mid-season contracts crumbled, futures collapsed, and trust evaporated. One Des Moines farmer, speaking to local press, captured the national mood. "It's not just our soy that's been cut off, it's our livelihood." But this wasn't just a canceled contract. It wasn't even about soybeans. This was a geopolitical message delivered through agriculture, and it landed like a missile. On paper, Beijing's justification sounded clinical. Quality issues. Fungus, traces of pesticide residue, and minor contamination concerns. But beneath the bureaucratic language was something far more deliberate. The USDA confirmed that U.S. soybeans had cleared all international food-grade thresholds, with contamination levels below 0.01%. The WTO hadn't registered any formal complaint. No flagged shipments. No prior alerts. The accusation didn't just lack evidence, it lacked precedent. What it didn't lack, however, was timing. The announcement came exactly 48 hours after President Donald Trump unveiled a sweeping new tariff package. 20% levies on Chinese electronics, metals, and EV components, totaling $90 billion. Beijing could have hit back by slapping retaliatory tariffs on American semiconductors, aerospace goods, or pharmaceuticals. But it didn't. Instead, it went for soybeans, the one export line that directly fuels Trump's political heartland, the Midwest. As one Rabobank analyst put it, Trump fired tariffs, China fired soybeans. This wasn't tit for tat. This was targeted economic warfare. Not symbolic, but strategic. It revealed that Beijing wasn't just prepared for escalation. It was prepared to escalate on its own terms. And more dangerously, it demonstrated that China could cut off a $14 billion agricultural flow, a staple food commodity, without creating panic or famine at home. In short, Beijing didn't just retaliate. It performed a live stress test on American economic resilience and watched Washington fail it in real time. Interestingly, the most unsettling part of this maneuver was that China didn't flinch. There was no scramble to replace U.S. soybeans, no emergency meetings in Beijing, no shortage warnings, because the backup plan wasn't a backup at all. It was already operational and years in the making. Before we continue further, tell us, are you enjoying the video? If yes, please like and share the video and subscribe to our channel to watch more videos on the latest news stories on geopolitics, economics, and current affairs, impacting your lives. Since 2020, Brazil has quietly transformed into China's agricultural insurance policy. Backed by over $11.2 billion in Chinese development loans and infrastructure funding, Brazil expanded its soybean farmland by more than 21%. But Beijing didn't just fund the farms. It built the roads, the ports, the pipelines. It financed grain terminals in the port of Santos. It co-developed the Ferrogrão Railway, designed to reduce freight costs by nearly 35% from Mato Grosso, Brazil's soybean heartland. It negotiated tariff-free agricultural trade zones under BRICS Plus, giving Brazil both the logistical infrastructure and legal protection to become China's new lifeline. And while American politicians were bickering over tariffs, China was signing 15-year procurement deals with Brazilian suppliers, locking in volumes and prices that would make U.S. exporters obsolete by default, not dispute. According to Bloomberg Intelligence, Brazil can now satisfy up to 70% of China's annual soybean demand, an incredible statistic when you consider that just 5 years ago, that number hovered around 40%. With fewer GMO regulations, less geopolitical baggage, and long-term contracts in place, Brazil wasn't a plan B. It was a replacement already installed, waiting for a trigger. When that trigger came on April 28th, China simply flipped the switch. What looked like a sudden shift to the outside world was, in fact, a masterstroke of long-term strategy. It wasn't just about food. It was about independence, about showing the U.S. that the days of economic leverage through agriculture are over. The fuse was lit with soybeans, but it won't end there. If China had wanted to hurt U.S. farmers financially, it could have chosen any month. But it didn't. It chose late April, on purpose. That's the sharp edge of this move. From March to June, U.S. soybean exports hit their peak season. It's the time when nearly 40% of the year's revenue is booked, when contracts are finalized and ships are already crossing the Pacific. The U.S. agricultural economy runs on this rhythm, and China knew it. So what did Beijing do? It didn't wait. It canceled 2.4 million tons mid-shipment when it would hurt most. Worse, it chose to redirect those orders to Brazil at a time when Brazil's own harvest had not yet reached full strength, meaning China willingly paid $14 to $22 more per ton. That's not irrational. That's strategic. This wasn't a loss, it was an investment in leverage. China signaled it was willing to bleed cash in the short term to gain control in the long term. What America saw as a crop contract, Beijing saw as a pressure point. And by targeting it, China forced the U.S. market into chaos. Prices collapsed at the worst possible moment. Futures evaporated, and farmers, who had trusted their largest buyer, were left holding unsellable crops. This was no longer a trade disagreement. It was economic warfare disguised as logistics. And the deeper you go, the clearer the picture becomes. This wasn't just a soybean pivot. It was a full-spectrum test of economic detachment. And it passed. Soybeans were only the first lever. Corn is already sliding, down 29% year over year, with Brazil quietly securing a $2.6 billion corn deal covering 9 million tons over 3 years. Pork orders? Slashed by 72% in a single week. Wheat, sorghum, and even feedstock for animal husbandry, all gradually shifting away from U.S. exporters. This is no longer diversification, it's insulation. The goal isn't to mix suppliers, it's to exclude risk. And to Beijing, America is now a risk. If the world's largest food importer can cut off its largest agricultural partner overnight, reroute to an alternate supplier within days, and face zero food insecurity or civil unrest at home, that's not a policy, that's a system upgrade. But what's next? Well, here is where the story shifts from economic to existential. If China can decouple from $1.1 billion in U.S. soybeans overnight, what's to stop it from doing the same to U.S. treasuries? Think about it. China holds over $800 billion in U.S. government debt. If it begins offloading treasuries, even slowly, it pressures interest rates. If it pushes oil contracts into yuan through BRICS Plus, or settles more commodities in digital renminbi, it weakens the dollar's reserve status. If enough nations follow suit, the dollar loses not just value, but dominance. And if the US can't weaponize trade because its trading partners have other options, and can't weaponize currency because those partners don't use its currency, what remains? You see, soybeans were just the first move. The dollar may be the endgame. This wasn't a one-off. It was a dress rehearsal. A proof of concept that global supply chains are no longer neutral, and that logistics can be weaponized. That food is no longer just a commodity. It's a tool of statecraft. What began with a canceled shipment ended with a strategic realignment. The US lost a buyer. China gained independence. And the world just watched a future where economic power isn't dictated by who sells, but by who controls the terms of buying. Soybeans were only the warm-up act. The main event may be coming for the very currency that holds the empire together. So now the question isn't, can America recover the soybean deal? The question is, what if it was never just about soybeans? Who do you think is winning the trade war between China and the United States? Do you feel Trump is indirectly punishing ordinary Americans, farmers and workers, while appearing solid himself? In the comment section below, share your thoughts on what more China can do to ensure Trump feels the pain and reverse his trade war. Do you want to watch more videos like this one? If yes, subscribe to our channel and press the bell icon next to it. We bring the latest news stories on geopolitics, economics, changing world order, and current affairs. Things you need to stay informed. Thanks for watching, and until the next video, stay tuned.